Welcome back. Chennai Petro is the stock on our radar. Reported a weak set of numbers in the first quarter. The weakness in results was due to the inventory losses and lower GRMs as well. H Shankar, the managing director of the company, now joins us. Thanks a lot, Mr. Shankar, for joining in. And notably, there was an adverse reaction on the stock as well post those numbers. So the first obvious question is, what led to your GRMs, compress so much? Because your peers reported numbers, despite having a shutdown, their numbers were a lot better. So why the weakness in your GRMs in the first quarter? What do they stand at now? And what's your outlook for this entire year when it comes to gross refining margins?
Yeah, good afternoon to all the viewers. I think before we step into this GRM, I think one important parameter that we need to discuss is about the physical parameters, because that indicates the strength of the company. That also indicates that how we are actually doing with respect to our operational abilities. So in this regard, I think one important point is that consistently, if you look at the last quarter of 24-25, followed up by this quarter, we have been consistently doing more than 100% of the capacity utilization. At the same time, you should also appreciate that the operational excellence has led to a good level of distillate yield, which is about close to 80%, fuel and loss below 8%. These are all like great benchmarks when we look at performance. Now look at the performance with respect to the crude pricing and the overall financial result. Then it gives a different picture altogether, in the sense that if you see the core GRM, but what we call about as with respect to operation, it has been consistent with our last quarter also. At the same time, there has been an impact on the crude level, because of which the reported GRM is showing around 3.2. So I think when we look at our peer, that is what the comparison you are talking about, I believe that these are all comparable figures with respect to the overall performance of the company. And this is more or less in line with what a standalone refinery like our peers we are talking about. These are all in this almost comparable levels at which we are operating now.
So as of date, what does the GRM stand at? And at the same time, do you have any shutdown planned in the second quarter?
See, today when we are looking at our operational level and the GRM parameter, I think we are doing quite well now. The outlook is quite looking very good now. At the same time, we are looking at a window for shutdown, maybe towards the end of Q2. We are looking at it so that we can improve upon our operations going in future. Like, for example, if you look at our last year, 24-25, we had a shutdown coming in 24-25 in the month of September, October. And after that, our operational levels have really improved quite a bit. So I think this is very important for the health of the refinery and also for the reliability and operational excellence. So we are planning sometime around end of September, but looking at it, we have to also see the economic viability, how things pan out, and then freeze the date.
Okay. So, Mr. Shankar, is it fair to assume that maybe Q2, Q3 is when you're probably looking at a shutdown?
Yeah, Q2 end, we can fairly assume as of now. That is the plan we have now with us. So we will be also evaluating it down the line, maybe 4 weeks in advance. We will take a call, because we have to necessarily tie up all our crude requirements and also the product upliftment with respect to the availability of the shutdown. So 4 weeks down the line, just before the shutdown, we will take a call on that.
So what would your, bottom line look like for the entire fiscal then in FY26? Because you were marred by inventory losses this time round. You are looking at a shutdown going forward as well. So if you have to talk about, say, even the bottom lines, would it be a majority, maybe a first half loss that we would see for the company?
No, it is not. It is too premature to really assume such a kind of statement now, because, see, we are looking at an operational level of very good, and now looking at the current cracks position, it is really improved quite a lot. And we are also looking at a very positive July, August months to be coming up. So September is towards the end of the quarter that we are looking at. So with the current level of cracks and the crude price which has stabilized, I believe that Q2 we should be doing quite well. And I don't see any reason why. It's a very marginal red we are looking at now in the Q1. So we should be able to recover this, and Q1, the H1 should be a good result. That is the expectation we really have.
Okay, we're expecting better performance in Q2, and overall H1 will see better performance as well for the company. But Mr. Shankar, IOCL, recently told us that the refinery project, which is with the company, that is on hold. Could you tell us what has led to this? What is the impact that we could be expecting, and any impact in terms of your future projections that come in? Because I think you previously spoken about this Kaveri refinery that would add around $1 to $2 to your bottom line once it's commissioned. So, any change in terms of that and the impact?
Yeah, see, the refinery which was originally planned, it was a totally fuel-based refinery, which had about 6% of petrochemical intensity index also built in the project structure. And we had a lot of plans to move towards the higher petrochemical requirements in the phase 2 of the original project. So now, along with our principal, Indian Oil, we have been reworking on the project economics, and we were also looking at the project configuration so that if we are able to increase the petrochemical part at the beginning of the project itself, instead of going into phase 2 and further planning down the line, we have taken a call. How about looking at the configuration once again? And based on the configuration, we expect that the margin, what we are talking about down the line, would be much improved as compared to the. So therefore, the reconfiguration is under study now. And then based on the final outcome, we will be again going back and submitting one more final report before we embark on the construction execution activities.
Mr. Shankar, running short on time, just final 2 numbers before we let you go. One number you alluded to, fuel and losses, that has come down below 8%. Could you give us a sense, for every 1% reduction in F&L, what is the impact, the positive impact on your EBITDA? That's one. And second, on your debt, what does your debt stand at? And what's your deleveraging plan? Because finance costs have come down over the years.
Correct. So coming to the fuel and loss, I think if you look at the overall percentage, like every 1% of the fuel and loss that we are able to save, it almost gives us 500 to 600 crores of saving on an annualized basis. So that is the big number that we are looking at. So that's quite a significant amount of saving that can come with respect to the fuel and loss. Now, looking at the second part of your question regarding the that was regarding your
debt.
You said, right?
No, that was
part.
debt.
See, debt part. So debt equity, we are maintaining around 0.5 now. We have about 4,000, which is mostly related to the processing of our short-term requirements. And that is a very small portion of it. And we really do not foresee any problem, because we have been repaying many of our long-term debts and processing it and finding out the lower cost of interest which is prevalent. So we are actually taking the advantage of that, and we are leveraging all our long-term with respect to the low interest rates that is prevailing now. So, yeah.
Thanks a lot, Mr. Shankar, for joining in and giving us an outlook on the company. You sound fairly optimistic, as a result of which we will watch out for better performance coming in the first half of this year and thereafter as well. We'll keep an eye out on the shutdowns that you plan to take. With that, we'll take a short break. On the other side, we will have more news and updates coming in for you.